Hey friends, welcome back to my channel. If you're new here, my name is Bianca, and today I am going to run you through how real estate investment trusts or REITs work. But before we start, here's a quick caveat. The details I'm about to share might apply specifically to certain countries' REITs. So in this case, Malaysia and Singapore. But if you're from other markets, do stick around because these concepts are still useful for understanding REITs anywhere. Let's begin. First of all, we have what we call as the REIT sponsor, who plays a key role in the success of the REIT by first setting up, the trust itself and injecting the initial properties into its portfolio, followed by appointing a manager to manage its day-to-day operations of the properties. Having said that, their role also goes beyond just getting everything started. To give you a better idea, here's a rough breakdown of what a sponsor's influence may comprise of. Number 1, the sponsor could provide a continuous pipeline of assets. In fact, a strong sponsor does not stop their efforts after launching the REIT. They would continue to inject quality properties into its portfolio over time, therefore supporting the REIT's growth as well as diversification. So, this ongoing pipeline of assets will help strengthen the REIT as well as provide stability over the long term. Number 2, sponsors may also offer financial support. Whether it is by providing direct loans or facilitating its access to better financing opportunities, having a strong sponsor is essential to ensure that the REIT has all the financial resources that it needs. On that note, as an investor, it is actually pretty important to make sure that the sponsor of the REIT that you're investing in is financially robust. Ideally speaking, they should be publicly listed so that they can provide direct access to their financials and therefore a lot more transparency. Plus, REITs with a financially stable sponsor may be able to negotiate more favorable terms with the banks and therefore leading to better, loan conditions. Number 3, the REIT sponsor may also act as the master lessee in some situations. Okay, so in certain REITs, particularly those that are focusing on hospitality or healthcare, the REIT sponsor may lease those properties and then sublet them to the tenants. This thereby provides a steady stream of rental income to the REIT. However, on the flip side, if the REIT sponsor isn't financially strong, this could mean that they have trouble meeting their rental obligations, and then this will indirectly impact the earnings of the REIT. Moving on, we will have the REIT manager, who is essentially the brain of the operation. Their role involves buying or selling the REIT's assets, as well as making sure that the entire strategy of the REIT benefits their investors. That said, having a strong REIT manager would be extremely crucial because their decisions and strategies would impact the financial performance of the REIT, and this by extension would also impact the returns on investments for unit holders. So to incentivize that, REIT managers are usually paid a mixture of fees. So for instance, a base fee, which is based on how big the REIT is, usually based on their assets under management or AUM. And second of all, their performance fee, which is based on how well the REIT is performing. Perhaps to give you a better idea, let's break down a REIT manager's impact into 3 key areas. Number 1, strategic management. A competent REIT manager focuses on making well-timed property acquisitions that generate high returns whilst disposing any underperforming assets whenever necessary. They also look at improving their existing properties through renovations, which in turn can increase their rental income and eventually the property value. All of these, in the long run, would help to make sure that the REIT portfolio remains competitive. Number 2, a REIT manager has a big role in aligning with their stakeholders' interests. And it's not just about expanding the portfolio. A good REIT manager would always work with the investor's interest in mind, so aiming to expand their distributions per unit or DPU as well as a net asset value or NAV in the long term. They would also prioritize what we call as yield accretive acquisitions, meaning to say that they buy properties that earn more than they cost so that they can ensure a sustainable growth. Poor or irresponsible management, on the other hand, might just focus on, let's just say, growing their assets under management so that they can collect higher fees, even if it means buying overpriced properties. Number 3, a REIT manager has a big role to play in risk management. So a very critical role of a REIT manager is to manage the debt that the REIT incurs. Especially during economic downturns, maintaining a safe gearing ratio, which is basically your total debts divided by your total assets, is key to reducing financial risk. Therefore, prudent REIT managers would be very responsible in making sure that their REIT gearing ratio stays below the regulatory limit, which is typically around 45%. This safeguards the REIT into making sure that it is financially flexible and not over-leveraged. And that's because high debt levels can lead to increased costs and risks and thereby negatively affecting the returns to unit holders. Now, to shift gears a bit, while the REIT manager focuses on the strategy of the REIT, we also have, what we call as the property manager, who takes care of the practical stuff, such as, making sure that the property is well maintained, finding tenants, as well as making sure that everything is running smoothly. For their services, the property manager is paid a fee, usually based on the assets of the REIT. This fee is part of the REIT's overall expenses, and therefore it is extremely important that the property manager delivers value by making sure that all the properties that it manages are profitable. Next in line, we have who we call as the trustee, who is responsible for protecting the interests of the REIT's investors. So they are responsible for holding the REIT's assets on behalf of the unit holders, as well as making sure that everything is operating within legal boundaries. For this, they will receive a trustee fee, which is also part of the REIT's operating costs. And beyond just, holding the REIT assets, the trustee is also playing a big role in ensuring that the rights of the unit holders are protected. This may include making sure that the distributions are paid correctly and punctually, as well as making sure that the investors are treated fairly in case the REIT introduces any change. So, this essentially summarizes the different entities that are involved in making sure that a REIT functions properly. Now, while REITs are often seen as a great way for you to generate passive income through distributions, there are many areas that you still need to keep in mind. First of all, before investing in any REIT, please take the time to thoroughly read through the annual reports. This document outlines everything you need to know, ranging from the REIT's overall investment strategy to this property portfolio, as well as the associated fees. Second of all, you got to remember that every REIT comes with its sets of risks, depending on the sectors or geographical regions that they focus on. So because of that, certain REITs may or may not be more susceptible to economic downturns or even regulatory changes. This in turn would impact their ability to make steady distributions. So make sure that you're always comfortable with the risk before making that investment. That in turn leads me to point number 3, where you gotta remember that not all REITs are designed the same, and therefore you must pick the REIT that matches your personal investment goals. Some REITs, like I said, may be more focused on providing a regular income through steady distributions, while some other REITs may aim for long-term capital growth by increasing their property values. With that in mind, it's important for you to select a REIT that best aligns with your time horizon and investment goals. On that note, thank you so much for taking the time to watch my video. If you found it to be helpful, do consider hitting the like, subscribe and bell icon. And if you happen to be curious about the key REIT investment terminologies, I've actually made a video to explain all of that, so do check it out if you're interested. Till then, I wish you a pleasant day ahead, be kind to yourself and others, and I shall see you in my next video. Bye bye!